Good morning, everyone. This is our Bitcoin video for technically yesterday, as I just got done with our Cardano video. Now doing Bitcoin, and I explained really quick that the audio, for whatever reason, did not record yesterday. So redoing these real fast this morning. I'm using my primary analysis software. It's a professional suite of software known as Optima, and I want to look at this from a candlestick and a point and figure point of view. Two reasons. When things look like they're entering into some congestion and consolidation, that's where point and figure really shines, because it is a price action style charting, which means it only does price action. There is no time or volume. But real quick, and also one of the peculiar things with Optima's data offerings for cryptocurrencies is that this data comes from Crypto Compare, but it doesn't include the weekends. And I know that there's a way to change it. I just have been, I forget to investigate how to do that. But so you'll notice that there are gaps here between Friday close and the Monday open. It's just one of these kind of anomalous things with Optima software. But know that, but this does kind of give us an interesting look to see, if Bitcoin was traded like a standard financial instrument where, there is no trading over the weekends. That's what this would look like. So we would see that there's been two consecutive gap downs between the weeks. In reality, there has not been a gap down. Okay, there has not. It's just what it looks like when you don't use Saturday and Sunday. The move here, where we're currently at 39K, is a nice bounce on the week from the low, but otherwise it's not much has changed. I want to zip on over here. So on the point and figure chart, we have on the top left here, we have the $1,000 3-box reversal chart. So every O and X, every box represents $1,000 worth of movement. And I'm actually going to pause this quick to see if I can highlight these values a little easier. So just give me a second, which you won't even notice. And I knew you would not notice because I've spent the last 10 minutes probably looking at how to change that, and I don't believe you can. Anyways, this pattern here is this column of O's. This is known as a spike pattern, which means that there's 15 or more X's or O's in a column. And how it's traded is you would have taken the initial 3-box reversal, so you would have bought at 36K. The level to watch out for is the 50% of the range on this guy. So we'd be looking at 41,000 is a key level to look at for resistance. And then if it holds, if price retraces, a re-entry short is on the 3-box reversal from that column of X's. So if we do get an X at 41K, then the short would be at 40, 39, 38K would be the short re-entry. So that's on the $1,000 chart. Notice also that we were in a prior bull trend. There's that blue line. And then now we've shifted into, so we went from a bull market to a bear market. For those of you unfamiliar with point and figure, depending on the time frames you're used to trading on candlesticks, you will change bull markets and bear markets frequently or infrequently. But in point and figure, you are always in a bull market or a bear market. There is no zones of consolidation. There are just really, well, there are, but you're always in a bull market or bear market. Now I'm looking over here at the $500 3-box reversal chart on the top right. I'll maximize that. So we had this column of X's, then we had a column of O's, followed by a column of X's and a column of O's. This is important, all right, because there was a double top with these two X's. There was a double top, followed by an entry, and then another X. But then this column of O's formed, and we're continuing to move south here. And if we get a double bottom at 37K, and then we get a short entry at 36.5K, that does two things. First, it creates a new short entry, but because there was two X's above this double top, that creates a washout or a fake out trade setup. It's a bullish fake out. If there was only one X here above, that would be called a bull trap, but a bullish fake out is worse. As far as is it for bulls, it's worse. This is a worse pattern for people who are bullish. It's very strong for people who are bearish. What this would indicate is that there is another move south here. But when I look at this chart, you know, how much further south can it go? I mean, it can go a ways. I mean, Elliott wave, again, I'm not an expert on Elliott wave. I'm also not a huge advocate of it. It's one of those things where I feel like if I knew it a lot more, I probably would use it a lot more and advocate its use. But I like the idea of Elliott wave teaching us that there's structure, because there's a couple things going on here. First is that there's a corrective wave that is completed. So an ABC corrective wave has completed, and we could just be looking at a new beginning of an impulse wave. Or we are looking at the fourth corrective wave inside of a new impulse wave south. If that's the case, then how much further south are we going? According to this, Fibonacci expansion rather. So we would be looking at this, sorry, what was it? Boom, boom, boom. This swing. Yeah, I mean, minimum 28K. All right, minimum 28,500. And then I think at the very deep end, we'd see that 21,000. Although we know that it would more likely be around that $24,000 value area. So that's what it looks like on the $500 three-box reversal chart. Then zipping on over here to the $100 three-box reversal chart, which is the quote-unquote fast one. Look at that column of O's. That's pretty nuts. That's a $15,000 range on the $100 chart. That's a pretty steep drop, mostly because it's accounting for a gap that we don't see on other data providers. But just using it, this red line is the bearish trend angle, so watch out for that. And near term, look for a retracement with a three-box reversal to 39K. Even if that does occur, then we'll probably see this drop down to at least test the where's this range here at 36,900. Just be on the lookout for what Bitcoin does here as it's getting close to 40K, 41K. There's a lot of things pointing to it continuing south, not continuing higher. The only reason I'm focusing on this on the short side of this right now is because that is the most dangerous condition. Upwards momentum is still likely. That is the dominant trend here. So, know that is the case, but the threat here is mostly to the downside and trapping a lot of people who are trying to get back in long. From All the Exchange Rates UKTV, thank you for watching. Please don't forget to like and subscribe.